Welcome to Azzad Asset Management's presentation today on ethically screening your investments. In our day-to-day lives, many of us try to be conscious consumers, choosing not to buy products from companies that destroy the environment or abuse factory workers, or going out of our way to support fairly traded products or companies that support charities we like. But how many of us are also conscious investors? When you think about how much money you may be investing for retirement versus how much you spend buying products, it could be argued that investment dollars have even more impact than consumer dollars. The goal of this presentation is to help you understand the factors involved in ethically screening your investments and to show you how Azzad's screening process works. So we're going to introduce you today to Azzad Asset Management and talk about how halal investing fits within the growing field of socially responsible investing. Your presenters for today are Josh Brockwell, Investment Communications Director at Azzad, that's me, and Amina Rubin from our Marketing and Communications Department. For more on Azzad, I'll turn it over to Amina.
Thank you, Josh. Just to give you some background on Azzad, we're a boutique firm located outside Washington, D.C. Azzad offers halal, socially responsible investment solutions, including mutual funds, custom wealth management, and retirement programs for businesses of all sizes. We're registered with the SEC as an investment advisory firm and work with clients nationwide. Our dedicated team includes chartered financial analysts and certified financial planners. As socially responsible investing grows in popularity, many big-name investing firms are now adding a socially responsible branch to their businesses. In contrast, Azzad was founded on a set of ethical principles and only does business in accordance with those principles, so our clients can be confident that their investments with us will not deviate from our socially responsible screen.
Thanks, Amina. And with that, let's now take a look at the growing field of socially responsible or impact investing. Sustainable and responsible investing, or socially responsible investing, SRI for short, is an investment discipline that considers environmental, social, and corporate governance criteria to generate long-term competitive financial returns and positive societal impact. Today, more than 1 out of every $6 under professional management in the United States, about $6.5 trillion or more, is invested according to SRI strategies. This data, by the way, comes from the Forum for Sustainable and Responsible Investment, of which Azzad is a member.
And now a brief word about where Azzad fits on the SRI spectrum. Azzad's mission focuses on generating competitive long-term financial returns while using investment capital to help build a sustainable and equitable economy. As such, all of our products and investments only comply with halal investment guidelines as established by the Accounting and Auditing Organization for Islamic Financial Institutions, or AOFI. We'll go into detail about those guidelines later. We're also a member of the Forum for Sustainable and Responsible Investment, which Josh just mentioned, and the Interfaith Center on Corporate Responsibility.
And here's a little more about AOFI, which sets the standards for Islamic financial services firms globally. AOFI consists of members representing a variety of Muslim legal schools of thought who come together and issue guidelines for the industry.
And here's how we put those AOFI guidelines into practice at Azzad. Azzad follows ethical investing criteria based on Islamic principles of economic and social justice. All investments are screened to exclude companies that profit from interest, alcohol, tobacco, gambling, weapons, prisons, war and international conflict, hydraulic fracturing, and other areas that cause societal or environmental harm. Companies with high debt ratios are also excluded. We also screen companies for their adherence to the UN Global Compact, which provides guidelines on environmental performance, human rights, labor relations, and anti-corruption.
These screens are part of our 7 tenets of halal investing, which you see on your screen now. These are the foundational principles that we abide by at Azzad, all of which are inspired by AOFI principles. And that brings us to how we put our philosophy into practice using our investment screening and filtering application, or ISFA. Here's a brief overview of the application. It's, in short, our proprietary software for screening the entire universe of investable securities.
In addition to looking at lines of business, we carefully examine financial ratios. We don't invest in companies whose debt ratios are greater than 30%. Companies must also comply with other ratios regarding their interest-bearing investments, debt, and liquidity. This is in keeping with the Islamic prohibitions on interest and the buying and selling of debt.
There is, of course, a sound financial argument to be made against investing in highly leveraged companies. For example, bypassing stocks whose debt-to-market capitalization ratio exceeds 30% leaves us with a list of high-quality names with capital to allocate.
Let's look at the screening process step by step. First, we obtain the universe of all stocks from our data providers. We run this universe through ISFA, which screens all stocks. This results in securities falling into one of 4 different categories. The stocks passing the ethical screens will have a pass ruling. The stocks that fail one or more of the ethical screens will receive a fail ruling. Stocks that have any of their financial data missing will receive a not available ruling. And stocks whose lines of business need to be further researched get a manual ruling, indicating that additional research will be done by hand, so to speak. We'll walk you through this process with a couple of examples.
So here's an example of what a company that passes our ISFA screens looks like on our web interface. The technology company Apple shows up as a pass after screening for lines of business and excessive debt or interest income. This ISFA ruling is as of March 2016, by the way. The company could fall out of compliance, so we need to check back on a monthly basis to make sure nothing has changed in the company's line of business or financial statements.
And here's a company that has failed Azzad's ISFA screens as of today. Even though IBM is in the information technology sector just like Apple, you can see on your screen that ISFA detected a line of business that runs afoul of our screening criteria. In this case, IBM has a credit arm that deals in financing arrangements, thereby making profit from interest income. And by the way, we chose this example intentionally because we talk to people on a regular basis who think that by investing in IT companies or by avoiding the obvious big offenders in the ethical universe, that they can do it themselves and keep their investments free of impermissible companies. But looks can be deceiving. It's important to have access to the data vendors that report detailed company statements and to have the technology to decipher what that means to a values-based investor.
So there you have 2 examples of companies that pass and fail our ISFA screens. For some companies, more in-depth research is required. This can include site visits to observe business practices and interviews with the company's management to discuss any concerns. We've had staff interview management at restaurant franchises, for example, to get direct reports of how much drink sales make up total receipts. Things like that are sometimes necessary in order to supplement some of the vendors. These extra data points help us to paint a fuller picture and to make an investment decision that is consistent with our values.
And as we mentioned earlier, just because a company's stock passes ISFA one day, it doesn't mean that the company will pass the next day. Therefore, we need to verify that stocks comply with Azzad screens on a continual basis. On your screen now is some information about the ongoing verification process. Let's talk now about how we work with our institutional portfolio managers to implement ISFA.
At Azzad, we offer access to 6 quality management companies under one roof. These managers handle a portfolio of individual securities based on their asset class specialization. These are world-class managers well known in the SRI industry and beyond. However, their high minimums, which are often reserved for institutions, limit their access to retail investors. But at Azzad, we offer our clients access to all of these managers, and all of them incorporate ISFA into their investment process for the portfolios they manage for us. We make sure of it.
Next, let's talk about how ISFA can impact an investor's portfolio. Our screening methodology creates portfolios that exclude financial services entirely, in addition to overweighting sectors like technology and healthcare. We'll see how this might impact performance in a moment.
But first, let's take a look at how a conventional portfolio compares to an Islamically screened one. We've taken the Dow Jones Global Allocation, which is known in the industry as a total portfolio index with exposure to major market sectors, and compared it to an Islamic version of the same index. Although this is not an Azzad portfolio, it is intended to illustrate the impact of Azzad screens.
This table shows that the Islamic indices outperform when the industries they don't invest in underperform, as we might expect. Take the Great Recession, for example, when financial services was the hardest hit sector. The Dow Jones Global Index we showed you on the previous slide is in the 3rd row. It returned negative 24.98% during that period versus the Dow Jones Islamic Index, which returned negative 20.92%. So the Islamically screened index fell, but by about 4 percentage points less than its conventional counterpart. This is most likely because the Islamically screened index has no weight in financials.
The opposite is also true, as was the case in 2012, when financial services was one of the top performers. There are also sectors in which Islamic indices are more heavily concentrated, like technology. When the tech sector overachieves, Islamic indices tend to outperform their traditional counterparts, as we saw before the dot-com bubble burst. Based on the table, the opposite also appears to be true. Take, for instance, what happened after that bubble burst. Islamic indices plunged further than their conventional counterparts.
Let's zoom out and take a look at the long term. On your screen is the conventional Dow Jones World Index, the blue line on the graph, versus the Islamically screened Dow Jones Islamic Market World Index, shown in brown. We analyzed their performance over the last 20 years. At the end of the period, the Dow Jones Islamic Market World Index outperformed its conventional counterpart with an annualized return of 7.28% versus 5.93%. There are most likely several reasons, but one can reasonably conclude that this behavior is due in part to the longer-term lagging performance of Islamically prohibited industries like financial services, combined with the longer-term outperformance of permissible and often overweighted industries like technology. Only time will tell if this trend will continue, however, and more research is necessary. As the investment advisory industry disclaimer goes, past performance is not indicative of future results.
So the bottom line is that halal and ethical screens can help performance depending on sector trends. Long-term, applying Islamic screens can be advantageous, but more research is still needed. Regardless, there are currently in the marketplace today solid alternatives to conventional financial products, alternatives that apply exclusionary screens to make sure that you grow your wealth in a way that is consistent with your values. We at Azzad are proud to fill this niche. And we would also like to add that we're happy to screen the holdings in your portfolio as a complimentary service to make sure that they're consistent with your values.
As we conclude today's presentation, please take a moment to look through our disclosure information.
And while you do that, I'd like to remind everyone to please visit our websites, azzadfunds.com and azzad.net, where you can learn more about our products and services. While there, you can also sign up to receive our monthly e-newsletter for ongoing information. Finally, be sure to follow us on Twitter. @Azzad Funds is the handle, and like our Facebook page, facebook.com/Azzad Funds. And for this video and others like it, you can always check out our YouTube channel, youtube.com/Azzad Funds. Thank you for your time.